about 10, 11 years. Time flies. um, been doing stocks for about 8 to 7 years, but really options kind of blew up this year, the past few months for sure. Um, yeah, so that's pretty much it.
But, but all right, but so it seems like you've had a good amount of financial success. So like who or what put you on? Like when did you really start thinking like, all right, money's important. I gotta make sure I take care of myself. I gotta make sure I start building wealth. How'd you kind of get on that financial path?
It's kind of strange. I kind of tell the same story to everybody. It was just a vision and a thought. It kind of started from college towards my senior year. Being in IT, I heard DC area was like, kind of like the East Coast mecca of, government contracting, getting on the government side. So it was weird. I kind of told myself, I wanted to make a certain amount there, and then I wanted to move to the South. Like I said, I'm from Virginia, Southern Virginia. So I didn't really want to move back home for sure, but I didn't want to go too far away from family, so I ended up, in Raleigh, North Carolina. I do have a lot of extended family here, um, but yeah, it was just a vision. That was pretty much it from as far as relocating and just having a mindset of money. And then as time goes on, when I was pretty much filing my taxes, I had a great accountant where she told me like, Mike, okay, you got another job, you're making more money, you need to start doing something. You need to purchase or you need to understand tax write-offs and things. And ironically enough, I really started dabbling in like tax write-offs when I had read an article about Donald Trump some years ago,
Yeah.
that he had paid less. I forget the exact verbiage, don't quote me, but he pretty much had paid less taxes or tax bracket than his secretary. I was like, how is that possible?
Right.
$3 billion man, like, what do you mean? So just, researching and seeing all the benefits from just writing, and mind you, things have changed drastically in the past 10 years of things that you can write off. But understanding that, and it just sparked my mind.
Yeah.
So it's like, okay, now, okay, let me do this, let me do that. And things just started, kind of just going into place. You kind of have an idea. As long as you keep working, you just got to be cognizant of the signs that are in front of you, because we all have the same routine. So we got to ask ourselves, when something changes, when I met someone, when we actually had a, not just meeting someone, but had a intellectual conversation, or something is being presented in front of me, I got to ask yourself why. We all do the same things,
Yeah.
Monday through Friday, Saturday to Sunday. We do the same routine. So yeah, just been paying attention, and that's where I picked up on some of the rental properties and things like that. Literally, I don't work there anymore, so I can say it, but I was at work, just browsing. I was like, oh, I was like, well, shoot, let me check this out. And then, getting more into that, understanding that process is extremely quick. Not necessarily finding the house, but once you find it and they accept your offer, that's when like, oh man.
Yeah.
So
Yeah.
yeah, that's pretty much where the financial literacy just came in, and just started, just didn't really have any particular idols that I looked at. It was just going with my gut. I'm very spiritual, and so I'm like, some of this stuff has to mean something. So
Yeah.
that's pretty much where it came from. And I do my own due diligence as far as looking up certain people. Like I listen to Tom Bilyeu from
Hmm.
Impact Theory. I like his show on like YouTube, because he brings on a lot of people that started from the ground up. They're not just trust fund babies. Like, no, he gets people that's really out the mud from all ranges, whether in the music industry, media, it doesn't matter, self-made. And then of course, Gary Vee. I like Gary Vee. He's been blown up definitely recently, more so in, I would say the urban community for sure. But I've been following him for the past couple of years, where I would listen to him every morning,
Yeah.
um, going the way to work and leaving work. So just the mindset with that was, what are you waiting on? That's his biggest thing. Is like, because when a lot of times we have analysis paralysis, where basically we're trying to analyze so much that we don't know where to start. And sometimes you just gotta just take a leap of faith and just do it. I think, you know, we've done that in all areas of our lives and we don't even realize we're doing it. So,
Nice.
but yeah, that's pretty much where like it's just kind of all kind of sync together and little pieces of the puzzle are coming in.
Yeah, yeah, yeah. No doubt. We definitely take those leaps of faith, rather we know it or not, because we'll go and spend $100,000 on a college degree off the strength of somebody else telling us that's what we should
Facts.
do, but we won't put $5,000 into our own education to learn something outside of the system that we kind of were pushed into. So yeah, no doubt, no doubt. All right, so seems like you got a good handle on building wealth and all that. So where'd options trading come in? How'd you get into that?
So it's funny. So I was trading the stocks. I had a goal in mind that I wanted to make for the year. And then I just started being realistic. I'm like, man, this goal, just trading stocks alone, that's gonna be tough. Unless I wasn't thinking at the time, which is crazy to do like the Teslas and the Apples when it dipped, and those companies are so strong that they just bounced up and just took off. I mean, Tesla was down to like 400, $500, in March, and now, they're getting ready to touch 1,700. So I probably could have made my goal sooner doing that.
Yeah,
But and then what it was, man, it was about, it was one particular week where I had people reach out, wanted to know how to get into investing. And I had some people that were brand new into it, but they used the word options. I'm like, I don't know what options are. Not really.
yeah.
It was about the fourth or fifth person within a 3-day time span. And like I said, it's all goes into paying attention to the signs.
Yeah.
So I'm like, these are people that literally don't really have much institutional knowledge about options, but they're curious. I'm like, well, shoot, maybe I need to get curious. And then, I actually was having a, daily conversation, really with one of my buddies, who does options. And he's like, Mike, man, I be seeing some of your numbers you posted. It's like, bro, you can do 10 times as much as that. And I'm looking like, bruh, like, what do you mean? Like, there's no way. Like, I'm glued to this screen day in and day out. What do you mean I can make? So, he showed me the path, and shout out to Shanze, yeah, he showed me the initial path, and your course, once you develop the fundamentals, you kind of develop your own strategy and things like that. But that's pretty much how I got into it. He was about the last person where I just couldn't take it anymore. I was like, you know what? He's like the fifth person that's asked me in 3 days, maybe I need to learn this.
Right.
And yeah, it pretty much changed. It changed everything.
Okay. All right, but so what are some of the resources? So it sounds like you have somebody that kind of puts you on game. What are some of the resources you use to kind of learn how to trade options?
Everything. It really is YouTube. Just reading different articles. I was already reading a lot of the stuff anyway because I was actively trading.
Mhm.
But it just open your eyes to just a different mindset. So he pretty much showed me the fundamentals on how to buy the contract and things like that. And then, he was still fairly new to it as well. So we just kind of like just piggyback different ideas. We were already doing that with just trading, but really understanding how options work even to this day, it's pretty complex. I'm still learning. Excuse me. But yeah, so I'll use, a little bit of everything. There's one particular person, I can't recall his name, on YouTube. He explains a few different things. Like I was looking at him for reading the candles better. So that way you're not really guessing because, guessing doesn't get you anywhere. You can have an educated guess, but the market does whatever it wants to do,
Yeah.
and so, and I've learned, and that's another thing, you learn just from when you want to do something, as long as you're passionate about it, stuff is just going to click to you. So if you're watching CNN or CNBC, and they start talking about, let's just say Apple, because I used them earlier, or Tesla. So and then they start speaking about Apple, and the next thing you know, that stock shoots up. Why did it shoot up? Oh, it shot up just because they're talking about them. So it's like, okay, so now you throw that in there. You got news. News will affect. And then you got certain people, say like yourself, who has a nice following, and they say, hey, Michael's company, is about to blow up or Michael's company is trash. Literally, I've seen it where you could make the daggone company, the stock go up or go down just because you got 1 million followers and people respect what you say about, about the particular industry. So, and then of course you got the actual business side of things where the numbers, this is what the projects are coming up to. But there's so many different factors that you do gotta, take it with a grain of salt, but you gotta still throw it in the equation.
Facts. Yeah, it's crazy how just like simple news or like you were saying, a person. So like Carl Icahn, if he shorts a company, he going in on that company every day. Like he trying to get as much bad press as he can on the joint. Like he'll run your company into the ground just off the strength that he got a short on it and he trying to get his money. So it's crazy.
Yeah, that should be illegal, man. I'm transparent. I've lost a lot of money. I forget what the last company was. It was dealing with the electric vehicle, that whole, people trying to be like the next Tesla.
Yeah.
And it was one particular guy, man, and he tweeted and he had some facts, he posted, and man, that stock literally from the time he tweeted it, it had dropped like 20%. Dang. It was something disgusting,
Dang.
And now if you would have had the stock, if you would have bought the stock outright, yeah, that would have hurt, but eventually it might would have got back up.
Yeah.
But in the options world, you have multiple factors, time decay, different Greek letters that mean different things that, once you go in that hole, man, the next day needs to be up 30% just to get out the hole.
Yeah.
So it's, you just learn a lot just as you go along because, like I said, you can soak up all the knowledge you want. There's literally probably 1 million people that are trying to teach stocks in some way, shape, or form. So if you're trying to ingest all the information, it's just not going to work. You just really just got to jump in the pool and just take care of it. Oh, what up,
yeah. No doubt. Swim with the sharks. All right. So you mentioned some losses. So what's one of your biggest successes and then one of your biggest losses? Well, it sounds like that was one of your biggest losses. So what's one of your biggest successes?
I say I don't want to talk about figuratively how much. Yeah, that shit still irks me. But I'll start since we're on that. Netflix, man, Netflix hurt me. Yeah, because everyone, all the websites, said they're gonna pass earnings. Don't get me wrong, they made money, but when typically with earnings, a company on a data sheet, they project to make this much money per share. I think they were off by like just cents. The public does not care.
Yeah.
If you didn't pass, you didn't pass. They don't care how close. And
if that joint red,
bro,
no good.
Netflix dropped, I think, $70 or $80 within a matter of 5 minutes. And of course, it happened after hours. I hate earnings after hours. So literally 4 p.m. hit, earnings went out, and it shot down. And when options, you can't trade in after hours. So you're at the mercy watching tears come down your face. And because I think at that point in time, that stock was at like 540, 530, or roughly like that. And then it dropped all the way down to like 420, 430, 440. It tried to bounce back up. We thought we were going to make it. I think even to this day, I think it's only at like 480 or something like that. So it was pretty gross. But the biggest successes though would be I forget what some of the companies, but being able to make 200-300% in a matter of 1 or 2 days.
Yeah.
That's huge. That's what changed the game for me, because to buy a stock outright, in order to get that type of return, I would have had to invest heavily back in March when everything dipped.
Yeah.
So to meet my personal goal by the end of the year. So the fact that I can see this, I can literally practically make, a couple 100%, if not more, really is unlimited, almost every week in a sense, depending on what you're choosing. It's just mind blowing, and that's what changed the game for me. But that's pretty much the biggest success. I can't really recall one particular trade. And I'll use my first trade, even though I still forgot what it was. My first trade was I put $400 in, and The next day, it was up 100%. And I was like, okay, well, I'm just going to wait a little bit longer because my contract date is not for a whole another week or two. And yeah, I ended up pretty much flipping that 400 and I made 1,200 profits. I got 16 back.
Mm.
And that was like the light started going off in my head. I'm like, look, I kind of like knowing my budget's a little bit higher than that. So I'm like, if I'm doing that with 400,
Yeah.
oh man, that hamster wheel is spinning. You know what I mean?
Yeah.
So, yeah, and that was pretty much that ignite the flame. But like I tell everyone, it's like, when you're constantly winning, your ego takes over, and you start making little mistakes. That's why I have, I got this in front of me, my little rule sheet. The number 1 and 2 rule is no revenge trades, no emotions.
Mm.
The market don't care what you lose, what you make. It's
Nice.
going it's going to move regardless.
Nice.
So, and then, but when I say revenge trading, it's like, if you gamble or things like that, where you say, okay, Keem, I bet you $1, I do this, and you beat me like 3-4 times. I'm like, well, shoot, double or nothing, triple or nothing.
Yeah.
That's revenge.
Yeah.
You're trying to get back what you lost, but you're not. Now you got tunnel vision on trying to make your money back. That you're not paying attention to all the technicals that's telling you, yo, tomorrow he gonna win again. The next day he gonna win again, and yeah, it happens, and it happens more often than you think because we all want to win. No one really likes losing. You're supposed to learn from your losses, but it's that's the biggest game changer. It's just if you win, just who cares? That was in the past. Stick to your strategy and keep winning.
Yeah, no doubt. No doubt. The emotional part of trading is just something that I think a lot of people struggle with, and I struggle with it too. Because like you said, you start having a couple wins, and then it's like, all right, I'm the master at this joint. I know exactly what I'm doing. I'm about to go in on everything. And that was me this year with the after hours. So I just got put on like after hours trading this year. So like every time I pull up the earnings schedule, I'm like, all right, Wayfair is on Wednesday. I'm about to get in this joint. As soon as they do earnings, I'm hopping out right after earnings. So like, yeah,
Yes.
man, that emotion is a crazy part.
Brought up, and I don't mean to get off. It's not really off topic, but you brought up Wayfair, man. You just reopened a wound. So I was looking at Wayfair when it was about at like 225, man.
Yeah.
And I'm looking at all the technicals, and it's like it's overbought. It's overbought. And typically, when stuff goes overbought on RSI, it comes down. Maybe not a lot, but it comes down. Man, you see where Wayfair is at now.
Right.
And I told you, it's at like 320, 330. And I watched that thing for 2 weeks waiting for it to dip. Man, that thing went up almost a whole nother $100. Do you know how much? You already know in options. I was so pissed.
Sick.
Because I knew it was a good. Sometimes you got to go with your gut.
Yeah.
And that's what I'm saying. It doesn't matter how much stuff you read, you watch. I mean, it definitely helps, but until you really get a pattern and go into have your own routine, anything can happen, man. And you'll miss it's too many companies out there for you to make everything, but if you got your eyes on one particular company and you know how it kind of operates, sometimes you just gotta go with the gut, man. So yeah. I learned Wayfair hurt me. It hurt me because I didn't get in, but that's what it is.
Yeah, no doubt. All right. So let's transition into kind of the basics of options. So what is a stock option, and how's a stock option different from just trading regular stocks?
So a stock option, the main difference is with the stock, you're owning a small portion of the company. So if you hold on to that company long term, you're getting dividends, you're getting things like that. Stuff you might get stuff in the mail or email. With an option, it's more short term. Option just gives the investor the right, but not the obligation to buy or sell a stock at an agreed upon price. Yeah. So if a stock is at $10 and I say I'm pretty much betting it's going to get to $12, then that's what your contract is, and that's short term. And then you have dates on a particular option for it to hit that price. That's the main difference. That's why you should definitely have, your short term and long term. Options is definitely more short term. You can have longer options, but unless you exercise that, unless you actually plan on buying your own contract, then it's still considered short term.
Yeah, yeah, yeah. So I think it's just breaking down the language, right? So stock option, an option to buy a stock at a certain price. So like you said, if you get a contract
Yeah.
between you and the person you're buying from to buy a stock at $10, you're saying, all right, I have the option, but not I don't have to. I have the option to buy this stock at $10. And what you're hoping is that the stock goes up to $12. So you got in at a lower price and then it went up. So you make the difference. All right.
Yeah.
So
Yep.
all right. So that's options. Well, I think we talked about a contract a little bit. You got anything else about what a contract is?
Yeah. So I know you got a few things to go over. So like with a particular contract, um, you have dates and you have a price, a strike price. So if you have a company that's at $10 right now currently, your strike price basically is just the target price that you think the company's going to get to. If it's at $10, you're betting that it's going to get to 11. And then in that contract, you have a date in which you think is going to hit $11. So if today is the 16th, typically not typically, the contract's on every Friday, not every Friday, but on Fridays. So you have to see, depending on the company, it could be every week, it could be every other week, once a month, depending on the volume of traffic for that particular company. Something like Apple, Netflix, some of the Microsoft, the bigger companies, you'll find contracts every week or every other week for sure. And then the prices in those strike prices is also critical. For the smaller companies, you'll see it be every 50 cents to a dollar. Bigger companies like Tesla and Apple, Netflix, it'll go up every, $2.50, sometimes every $1 or $2, depending like that. So you've got to be a little more strategic, but a lot of those bigger companies like that, if you pay attention, they're fluctuating that much in a given day. Especially a lot of the NASDAQ stocks, they'll go up, start off at $10, they'll shoot up to 13, or well, really those type of companies are going to be like maybe $100 a share, but they'll shoot up, a couple dollars, come back down, fluctuate. So it just all depends on the particular stock. And typically those that fluctuate like that, those strike prices are going to be further out. The companies that are smaller, like I was looking at Dollar Tree, their earnings is coming up. So with them, they fluctuate, 50 cents a day. Actually, this past Friday they did almost $3, which was it was a good Friday for them. So it just all depends on the particular.
All right. So what platforms do you use to trade? I think your audio went out, bro. No, it came in, but then it went back out.
You hear me all right?
Yep, yep, you get
Um, Damn, when I tugged on it, I must have broke it that quick. See, but what was the question again?
that. What platforms to trade?
Oh, so I use TD Ameritrade. I use their
Okay.
Thinkorswim platform. I like the Thinkorswim. It's more advanced. But on the flip side, I use the actual website to buy my options. It's just a cleaner view that I can see everything, because on their Thinkorswim, it's too much moving around. I need to be able to, especially when you're moving quick, I need to be able to go in there, click, 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 and I'm done. Versus, the background is black and the colors, everything is dark. It's hard to see.
Yeah.
So yeah, that's what I use.
Okay.
I've played around with, I've looked at Robinhood. I think Robinhood is great for first-time investors, even some seasoned investors. But it's a few different things that I like with them, like they give you like with options, they'll give you all the Greeks and things, everything about that option on the front page. They'll give you also what you're expected to make and things like that with the break-even price. TD Ameritrade doesn't do that. Surprisingly, I feel like that should be mandatory for all platforms. But yeah, that's what I use. There's all different types of platforms.
Right. All right, so let's break down some terminology. What's a call? What's a call option?
So call is pretty much I wrote down the notes. So you're pretty much just buying the contract. So call is you want the stock to go up. And then on the flip side, a put is you want the stock to go down.
Yeah.
So if the stock is at $10, I'm gonna buy a call option for $11. If I think, this stock is at the highest, $10 is all it's gonna do, I'm gonna do a put and say it's gonna get down to $9. So obviously once it drops, I'm making money. And if I'm doing a call, if it goes up, I'm making money.
Right. So what's you explain? I think you touched on a little bit before, but what's the strike price?
So the strike price is the price that you determine that it's going to get to in conjunction with the date.
Mm-hmm.
So that's all in the contract. The contract, and just to break down what a contract is, a contract pretty much is saying that I think this stock is going to get to a certain price by a certain date. That's the general terms of a contract, but more specifically too, one contract holds 100 shares of a given stock. So you'll notice that the contract prices are like sometimes fractional of what the actual stock is worth, but you got to times that by 100. So depending on the stock, it could be $50 or it could be 500, but it's times 100. That's pretty much what that is, with strike price in the contract.
Good. All right. So what does it mean that to exercise your options, and like how do the exercise dates kind of roll into that?
So going back to the example of you have a $10 stock and say it shoots up and it's at $15. So that contract, look at the contract more so as like a coupon also. So you got a coupon now that my strike price, say this my strike, $10 stock, my strike price was at $10, and then, or let's say my strike price was at $11, and it got some crazy news, it shot to 15. Well, you just saved $4 off that stock, which is essentially about 40%, so 45% or so, and so you can exercise the right to buy that stock at the price that you said it was going to hit. So even though it's at $15, you can say, well, I want to buy it at the price that I said it was going to hit, which was 11.
Yeah.
Mind you, that can get pricey because one contract is 100 shares. So even though it was $11 times that by 100, what I mean, that's $1,100.
Right. Yeah.
So, but which is still is a great. I mean, it could be a great a win for you because you could buy it, exercise it, and really you could flip it and sell it. I mean, which I'm pretty sure, like I don't get into that, but I'm pretty sure that's what many people do.
Yeah, but yeah, I've never heard somebody explain it like that. But that makes it so much easier. Like it's like a coupon. So if you think it's gonna get to whatever, and let's say it's at 15, you have an option contract at 11. It's like you got a coupon. Like, yo, I get to buy the joint at 11, even though it's at 15. Yeah, so I like that. I've never heard anybody say it like that. All right. Can you explain what in the money and out of the money options are?
Okay, so sticking with the example, when you got a $10 option, $10 stock. So out of the money is the price that is above the current price. So if it's $10, you're saying, I bet it's going to get to 11, that's out of the money. If it's $10 and you want to go in the money a little bit, you can buy a contract that's at like $9.50 or $9, depending on how far back. Some people like doing that because it's kind of, it really all depends. You got to look at the numbers. Sometimes it can be less volatile, meaning that it doesn't it doesn't move as quickly. But then there's other instances depending on how far in the money you go that it can be more, you can get more return that way. Me personally, I've done a little bit of both. I've tried to compare how quickly it moves. I think once out of the money is nice because once it hits that strike price and goes beyond, it multiplies pretty quickly. Versus, I forget the actual algorithm and how they calculate it. When you're already in the money and the stock is going up, the percentage is still growing at a rate that's pretty fast, but I don't know if it's as fast. I haven't really been able to pinpoint that.
Yeah.
That's pretty much what in the money is. In the money is a stock that you're buying the contract and the price of the stock is above that contract price already. Out of the money, that stock hasn't reached that price yet.
Right, right. All right. And then so what's a premium?
So the premium is the contract price.
Okay.
So like for, let's use Dollar Tree. So Dollar Tree, the premium I had bought for it was $4 premium for Dollar Tree. So that was that contract. That contract at given time was $4.05. So you want to kind of all got to play into. You got to see how much those premiums adjust depending on how far out the money you go. The further out the money, a lot of times it's cheaper. Because if you think about it, you got a stock that's at $10 and you do a contract for $10.50 or $11, that's so close that it's going to be more expensive.
Yeah.
Like the banker, you could say, or kind of like, casino, they're not going to let you just take the money. You know what I mean? So they're going to charge you a little extra because you already right there versus, okay, I'm thinking it's going to hit 15, it's at 10. So, all right, I'm going to give you, instead of that $4 strike premium, it might be $1.
Right.
Times 100, which is $100. So yeah, it just all depends on as far as the premium pricing.
But yeah, but a lot of risk versus reward, right? So like even when you gambling, if I say, yeah, Floyd Mayweather gonna beat this amateur boxer, you can be like, yeah, like I'm not about to give you no extra money on that joint. But if if it's more risky, then you get a little bit more return. Thoughts on cannabis stocks? All right, so I think we broke down the terminology, talked about the basics of options. So did you have anything you wanted to share on your screen so you could show people like what you look at when you're trading?
Yeah, just also just to touch on, I see Margie said a few things. With all the news about coronavirus vaccine, have you guys looked at and considered biotech pharmaceutical stuff? Yes, that is the boom right now. You hit on the big ones already: Invax, Moderna. Throw in Nvidia. Nvidia is huge. Their price target right now is over $500, and right now I think they're at like 470 or something like that. And I have that on my screen. They're at 460. So I like looking for stuff like that where all the big companies, the big banks, they have a higher target price. To me, that's huge because if you pay attention to news, everything is affected. As soon as a company comes out and says, Goldman Sachs or JPM, or like when they say, oh, we just raised the price on Nvidia, we think it's going to hit $500. They don't tell you when, but that's still a good indication. So now if you got a stock option, I wouldn't go that far out the money. It's at 460 right now, but that it's a strong chance it's going to get there, especially like as we talked on earlier. When companies have a large following like that, that plays a huge factor. Versus I've seen on the flip side where the companies be like, well, we lowered the price. We reduced, we think instead of, the price target be 500, we lowered it to 430 and it's at 460 right now. Be careful. Don't use that as your only analysis, but a lot of times it may dip. It's a strong chance it may dip depending on where it's coming from. But no, that's the right mindset. You gotta go with the trends. I know with TD Ameritrade every morning, I think every morning, it'll show you even CNBC, it'll show you what industries were popping for that day, for the previous day. So I don't like to do it day by day, but definitely just if you just turn on the TV, everything is Corona. Everything is jobless claims and all that stuff. So um, investing in companies that are involved in some of the trends, investing in some of the companies that aren't laying off so many people, that all makes make a big difference.
Yeah.
And thoughts on cannabis stocks? I looked at some of them. A lot of them, honestly, man, they're going down. They've been going down for the past 6 months, so it's kind of hard. Um, I don't know. I dabbled in a lot of the cannabis stocks back in 2014 when that's when the legalization was really ramping up. Colorado, I mean, stuff was really booming back then. So now, yeah, it's kind of hard. I know there's one particular stock, I think Aurora, it popped up like 20 some percent, or something like that, nice number. But what does that mean when the past 5 months it's been going straight down? So I mean, you're gonna have a couple of spikes, but you don't know if when a stock is going down like that, you don't know when it's gonna pop.
Yeah.
So, you losing money the whole ride, you gave me 10% back. That's nothing. You know what I mean? Especially if that's an option, then you're fine. So
Stress yourself out trying to get 10%.
dude, yes.
Facts. Facts. Yeah, so for me, marijuana stocks, it's like the wild, wild west. Like I don't know who's gonna emerge as some of the market leaders. So it's hard for me. And I really just don't want to put in like the time and the effort to try to find who's gonna emerge when it's for me, I feel like it's a little bit far out. And then like one of my coworkers is like, man, how do you he'll like hit me up periodically and he's like, how do you like know about these stocks? And I'm like, yo, news is money. Like instead of listening to like some other stuff, like I listen to Bloomberg and like they talk about the news, but everything relates to money. So like if you just stay with that mindset that like this news and these companies relates to the stocks, and that's how I can make money. I think about like elections, coronavirus,
Yeah,
like change of the seasons, trends, like all that stuff. All of it's news, but it's also money.
yeah, most definitely, most definitely.
Yeah.
Thanks, Margie, for bringing that up. But yeah, just to piggyback, I mean, you don't. How do you know about the stocks? I mean, it's the same thing when people hit me up like, how do you invest in something? It's like take a little bit of time and just research. If you Google, the first one up there you have is on Invax, Novavax. If you Google, all the news you need to know for the most part is going to be right there. So I mean, and then what you do is you look at the stock and say, okay, that looked like good news. Let me see what it did on that day. Oh, it jumped 10%. Oh, that's bad news. What did it do? Oh, it went down 3%. So then you can get a feel for it. And people also ask, what type of stocks, where do I start? You start with the everyday stuff that you wear, your phone. I mean, just start there and look at it. Pay attention. You'd be surprised at some stuff that you didn't even know were like so affordable, or you thought that company owned that company, and really it's another company. And like you learn so much. And then, like you said, throwing in the election, right now this coronavirus is going to be huge for the election. The jobless stuff is going to be huge for the election. So making sure, but also be mindful that when I say huge, it can make some companies pop, and it can also make the overall market, it could possibly hit another nice little dip. So just being mindful of stuff like that.
Yeah.
It's just so many different factors.
Facts. Yeah, I'm looking forward to election week because I'm gonna be in there. I'm gonna be in and out.
Yeah,
trying to make
definitely in and
it
out,
work.
man.
Thanks.
Definitely.
All right, bet. Do you wanna try to share your screen?
Yeah, let me just put this on this. Give me 1 second. Let me just stop that we're looking at. Share 21. Can you all see this? Can you see it?
Not yet.
Oh, I'm sorry. I didn't hit select.
There it is. Yep, we good.
Okay. So this particular company, this is Home Depot. So what I like to do is, and this platform is Thinkorswim. This is coming from TD Ameritrade. And what I've learned from just, looking at other traders and how they trade as far as like these different windows. So this window right here is my daily window. So the daily window is by 1 minute candles. So that means each one of these are 1 minute apart. And what I have down here is a 10-day, 5 minute chart. And then on the top right would be a 2 hour, 45-day. Why do I have all these? Well, you got to know the trend of the particular stock. People ask all the time, how do I know if the stock is too low or too high? Well, this is how. If I'm looking at a particular stock and I go, right now looking at the single day, you don't know if 280 is too high or if it's too low. So I might do just a quick analysis. I look at the 10-day. I'm like, okay, it has a nice, slow gain, nothing too fast. You don't want anything to really pop up too fast because then it comes down. So I zoom out to the 45-day. And then I see it has a nice, slow little dip and just keep going up and up and up. So you have higher lows and higher highs. That's what you know. That's what you want. And what you see, some of these lines, these are trend lines that I made. Well, starting at the first chart, the first top left. This is something called the VWAP, which is volume weighted average price. That's more so kind of geared for day trading. It'll still help you get good positions if you want to purchase at that particular day. And these at the bottom left and the top right, these lines, these are trend lines that I created. So basically what that means is what I did was I plotted a line. For the most part, you want to plot lines from the low. That'll give you a rough average of the trend. And then you plot the line for at the top of the peaks. So meaning that if you notice, and these are called trend lines. So what happens is when you plot these lines right around here, here, it doesn't have to be perfect. And you notice that it stays within those confined spaces. So for me, we have earnings coming up. Look at that. So 8:18 at 8 o'clock in the morning. Right now, it's pretty much at my trend line. But with earnings coming up, it's a strong chance it might stay up on that trend line and go above it. So, but if you want to ask yourself, is this too high for me to purchase right now? Possibly. You know what I mean? But that's just a small fraction of the puzzle. When you have things down here, like I like to use the RSI, which is Relative Strength Index. So typically what happens is, let's use this little time piece right here. That is too zoomed in. So with the RSI, anything below 30 is called oversold. Anything above 70, you notice the color changes, is called overbought. Almost like clockwork, whenever it goes into this oversold, it pops up. And then it does the same thing for when you zoom out to the 5-minute candles and the 2 hour, 4 hour candles. So this will give you another indicator. Like I said, you kind of got to piece together the puzzles. This will give you another indicator that it's either overbought, oversold, or if it's kind of right in the middle, go with your gut feeling. You know what I mean? So, but go with the gut feeling still after you utilize all the other technicals. So right now, yes, I think it's slightly overbought, but the RSIs and stuff look good. With earnings coming up, it's a strong chance that it's going to keep going up. Then on my charts down here, this part in the middle, the bottom right, this just shows the trades that are going in. I like seeing within that minute how many people. It's kind of like giving you a quick heads up before the actual candle finishes. And then the bottom right, I have news. So just to give you news about the particular company. Um, I want to show you. Here we go. So starts Home Depot at neutral with target price 290. It's at 280 right now. I'm okay with that. And that's actually very recent. Today's Sunday, so this will happen on Friday. They updated that. Action analysts, they lift Home Depot's price target to 290 from 250. That's what we want. You know, we have some folks put it to 306, 297, and that's JP Morgan. So like we want to see consistent, okay, they're raising the price, they're raising the price. All right, now I know I'm good to go. What I've done recently, and this is all part of my own personal strategy, is once I get a certain percentage, especially looking at the technicals, I might sell at the top. If I'm already up 150, 200%, what I've learned, and this literally happened probably not too long ago with Palo Alto. I was up 140%. I know earnings is coming up, I think in another couple of weeks or so. And so I'm like, well, shoot, this thing will keep going up. And then it dipped a little bit, which is still fine because it's still going up. But when it dipped, my 140% went away, and I only made, it was like 40% for the time. So adding to, you got to have a strategy. Adding to my strategy, now when I get up to a certain percentage, especially if I got another week or 2 weeks out from earnings, take your profit. It's going to dip. It might not dip a lot. It might go from 280 to 277. That don't matter because you know it's gonna get back to 280. So sell it, go back in, buy another option, and then just ride the wave. You know what I mean? That's pretty much what I've been learning from trial and error because, like I said, stocks go up and down, and you don't want it to go up and you don't want it to go down, especially as it'll hurt your feelings when you up 150, 200%, and you think it's going to keep going up, especially if you have another 2 weeks before earnings or something major is going to happen. There's no way it's going to keep that same strength. I mean, even Wayfair, which is like, it still hurts me, but even Wayfair has small days where it dipped down a little bit, so, but it just all depends on the strength of the company. And this is just what I do. Like I said, I have a lot of people ask for advice. It's hard to give advice because, for one, I don't want you looking at me crazy if you lose money, because you got to take the good with the bad and the bad with the good. So, but yeah, the basic thing for folks to do for the most part is look at, zoom out. If you were to go to Google, Google has the 1 day, 5 day, 10 day, a month, something like that. So that'll just give you a rough idea of if you are buying too high or you're buying, if you think it's going to crash also. So, and to give you an idea on how that looks with Google, just give me 1 second. HD stock. That's not a good one. Okay, so if we were to, you still see that? Yeah. So say Apple, you have the 1 day, 5 day, 1 month. So if we were looking at 5 days, you ask yourself, if we were right here, it's like, am I buying too high? It's a strong chance you are, because in 5 days, this is the highest point in 5 days. So if you were to wait just one more day, that Friday morning, it dipped from, 463 down to 453. It could have possibly dipped a little lower. These are just about 30-minute increments. So that's what it means. That's why you got to look at the chart as a whole. And you look at it in a month, we're at a top. Yeah. So yeah, it really all depends. But with a company like Apple, I don't think you can go wrong wherever the hell you buy it at. Because I've been waiting for it to dip, and that thing, like, actually I was looking at it at 415. I'm like, I think it's going right around here. Yep. And that thing jumped, and then it kept jumping. I'm like, let me just go ahead and buy a few shares. Yeah. So, yeah, it's not going to hurt you too bad. So even if it goes down a little bit, I mean, that's a fraction of a percent that you're not going to see. Yeah, this is the biggest thing that I do. Like I said, when I'm plotting out and looking at the trends, and you can do this with any stock, going back to chat. If we were to go to the chat, I know she mentioned like INVAX. And let me know if you guys have any questions or anything. So I didn't plot with Invax, but just going by what I just mentioned, um, it got as high as 198. And this was on, the date is at the very top. So that was 8/5. And then it came down and had a nice little dip right here, which is after earnings. So you hit it right on the money, sell before. Like that's what I noticed too. Depending on the stock, especially if it's been running strong, and I holding it overnight after earnings, you just gotta be careful. It just all depends on the stock. But it pretty much, a lot of these stocks, what they do, they run up before earnings. So you can catch the wave the entire time, sell the day of, the day before.
Yep.
And then look what happened. I mean, it went from 180 roughly. So it went from roughly right here, 179, 180, and it dropped all the way down to 120, and it's back to 146. See, that's a fast moving stock. Those are the ones I love when it comes to, options, because for every dollar, it's increments for options. But you can still get the same returns if you had a smaller company. So you don't have to spend that much money. But yeah, where you would buy it, that would have been a perfect time to buy. You can't get more cleaner than that. You would have instantly been up, from 116 to 146, that's $30. And options, that could have been 400%, 500%. Like, it's crazy how much money you can make in options, man. And the biggest thing too is, like, people are, which rightfully so. Look at that. I think it was at $43 in June. Jesus. But the biggest thing is just don't, there's so many different other ways too that you can do this and not use your own money. You got paper accounts. For the longest, I used Investopedia. Investopedia actually has it so, like, you can, like, join games and see who can make the most money, but it's paper money. And so that way you get an idea, you learn strategies, and it can be options, it can be stock trading. And that way you get comfortable. You actually build up your own strategy, because there's nothing worse, take it from my experience, there's nothing worse than trying to build your strategy and you lose money while building it. You know what I mean? So
yeah,
that's one thing that I wish I would have did more of. I did that kind of early on. Recently I haven't done that, but I kind of got a hold of it. But starting fresh out, even if it's buying stocks, Investopedia, even TD Ameritrade, they have it so you can switch to a paper account. So yeah, there's multiple ways just so you want to practice. And once you start getting good and you start consistently making money with the fake money, like, go ahead and put $100, $200 in and play with it that way. Now, I really honestly don't advise too much option trading initially, if this is your first go around. If you kind of got some experience with trading stocks, you kind of want to, it is the next level up to, in my opinion. Definitely give it a try, and don't be afraid to reach out to the help desk, the support desk of whatever application you're using. Because I made mistakes, and I bought, say, a stock price or sold it by accident. I called them up quick. Hey, I didn't mean to do this. This is what happened. Boom, boom, boom. Okay, Mr. Christian, can you verify? Boom, 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 boom. And they'll fix it. Options is harder because options are moving incredibly fast. Yeah, all those different strike prices, all those different premiums. The algorithm, I mean, it's a mathematical formula. They can't fix it. I learned that also. But yeah, they can't fix it. So start off with a paper trading account and just do your research. Just Google. I mean, the news is there. I mean, I don't know if Marty's still up here, but she hit it on the head with, as far as yeah, she is. Some of those companies, like, that's perfect. Like, literally, I had Novavax probably a couple of weeks ago. I think for earnings. Yeah, so I had it. And right now I have NVIDIA. I've been playing with NVIDIA. I took profit on NVIDIA last week, and I got back into it. So, and I'll be transparent and show you some of the ones that I've been looking at, and that's perfect. NVIDIA, Dollar Tree, these are prices. These are shown from Friday because the market is closing the weekend, and Lowe's, Home Depot and Lowe's, they both have earnings coming through. Um, I like both. I was more geared to Lowe's, just because the CEO, he's someone that looks like me, and so I was like, you know what, I'm gonna go with it anyway. I made some decent money on it, but I realized Home Depot is a stronger stock, not because of the price, but it's stronger. It keeps moving up. If we were to go back to the chart, it moves pretty consistently compared to low. And this I'm looking at the 45-day, the top right, compared to Lowe's. Yeah, I don't know. So, Lowe's chart actually doesn't look bad. I know that's not a good example, but it just was moving too slow for me. Patience is everything. I think that's up there too on my list. Yeah, so I mean, if you guys got any questions, and here's another one too down here. Lowe's price target got raised to 170, 140. So, and it's cool because certain news, they'll tell you about a straddle price, where they kind of don't know what it's going to do, if it's going to go up, if it's going to go down, but it got a decent price. So, the news is all out there. If you just type it in, you'll get so much information from it. Yeah. Hey, if you guys got any questions, yeah.
One of the questions on Facebook was who shouldn't trade stocks, and I think or trade options, and I think you kind of alluded to that earlier. Options is kind of the next step up, so you got to learn how to trade stocks and figure out what you're doing first. Maybe start with a paper account before you just jump in.
Yeah, I mean, yeah, I'm not going to say who shouldn't and who should, but it's really all about, the knowledge that you gain. Options could be your first step. If you've done the necessary steps to research and understand, because it can get complex. Like me personally, I don't exercise my right to buy for the options. I don't exercise the actual option to buy the contract. I like to make the money along the way, sell it, I'm done. That leaves my emotion out of it. For one, a lot of stuff can get very pricey. Like earlier, we looked at Dollar Tree, that contract price, it said 405, but times that by 100, that was $400. And so if you're talking about Apple and Tesla, you're gonna spend thousands. So, and that's just the contract price. So imagine if you want to exercise that price.
Right.
I mean, you're talking about 6 figures, so nah, I'm good on that. Let's just make money grinding up. I'll leave it alone and hop back in it. If I want to buy it, I'm just gonna buy 1 or 2 shares. I don't need 100, at least not right now. But that was a good question.
No doubt. All right. Any other questions in the chat? No. All right. What do you say?
No, I just appreciate everyone just showing up and asking questions.
Yeah, no doubt. I appreciate you, bro. This was good information. I think I told you before, I'm not heavy in the options. So I try to do my due diligence before the meeting and all that stuff. So I learned some good stuff today. I'm definitely about to look at this TD Ameritrade and I learned a lot, man. So I definitely appreciate you for coming through.
Let's see some of the stuff in the chat. You already said what podcast you listen to, didn't you?
Yeah, it's the Bloomberg radio app, the 24/7 news joint.
Technology education. Yeah, so something to look into now with school transition to online learning is technology education. Yeah, if you look at like even Zoom, oh my God, like that's why I say your mindset, man, your mind could be, if you just got the mind to think outside the box, like I didn't think Zoom, I mean, if you would have looked from March until now, that thing took off all because we're doing what we're doing right now.
Right.
You know what I mean? And because everyone's learning from home and stuff like that. I mean, even I had got into Party City. Party City at one point had shot up because everyone was doing the party at home, so they were going there and buying the supplies. Like, it's the smallest little thing that you didn't even think about. Like, you know, like Best Buy, like a lot of the technology companies and stores, you know, those companies shoot through the roof because people are at home. Lowe's and Home Depot. You know, I don't know about you, but I've been doing more home projects. You know what I mean? So it made the stocks go up. Like, so I mean, you're definitely, I think it was Margie, like, you're definitely on the lines. Like, you really can't go wrong right now as long as you're thinking that way. You know, when you're thinking outside the box, I mean, even the companies that make the mask and like all that stuff, there's just so many ways to invest. It's just kind of hard. You can't really go wrong as long as you're paying attention to zoom out. Don't look at that one particular day that stock is at a price. Zoom out so you can get the best price entry. That's what it's all about. It's just having the best price entry. So when it goes up, you know, you're making money.
No doubt, no doubt. Yeah, all about thinking outside the box. I went to Best Buy yesterday, and everything I went in there for, they're like, yeah, we ain't got no more of those. You know, we usually have them, but things been flying off the shelf. So I'm like, oh, Best Buy is doing numbers right now. So let me go see what they at. So you never question in the chat. So you never actually exercise the option. You just sell the right to the contract.
Correct. That's pretty much all I do. So if we were, you know, looking at, I think the last thing we looked at was Lowe's. Lowe's is 154. If it got to one, if I have a contract out and say Lowe's jumps up to 170 and I just made, you know, 200%, I'm just gonna take that cash and I'm gonna keep going, because the reason why I don't exercise, because it takes a lot more capital. But you got to realize you're buying. If my strike price for Lowe's is, for numbers, just say $100, 150 is close to it. That's 150 times 100, because one contract is 100 shares. So unless that contract is $1 or $2, like, I'm not messing with it. You know what I mean? I'm not there yet. That's the reason why I say that. But there's so many people, like I said, for short term. I mean, that is the options game. That's why you have a deadline. Yeah. So trust and believe, everyone, for all these contract dates and deadlines. Yeah, you're not going to buy all those companies. You know what I mean? Like, I might even really like the company like that. Right. But, you know, if it's strong, like Wayfair, I've never bought anything from Wayfair. But I knew they're hot. They're like the hottest thing right now. Shopify, Wayfair, Amazon. And I hit it right on the money, and it went up $100. I didn't buy. But yeah, you don't have to exercise the right to buy the option, not at all. It's actually much easier and simpler. Just literally buy the call, sell the call, and you're done. Good question, though.
All right. Well, I appreciate you, brother. A lot of good information. This joint's gonna be on Facebook as soon as we end the video. So everybody, feel free to go back and watch this joint again and reach out if you got questions. But thanks again, dog. I really appreciate it, man.
No doubt, man. I appreciate you, man. We gotta do it again.
Yep, absolutely. Hey, take it easy, bro. We out.
All right.
All right. Peace.